Hello, welcome Forex traders. We are looking at the US yen on the daily time frame this afternoon. I've just opened a sell order on this pair based on this break check pattern that's formed right here at support. Okay, so here's the bounce, here's the break. We go sideways as the market pushes back into this realm of the zone prior to the break. It's quickly rejected. Okay, telling me that the market's not going to allow any further movement to the upside. So I waited on a pullback, took the short. I wanted to keep my 2 times profit above the most recent swing level, which in this case, I don't know, somewhere in here, maybe down here. It's way down there, okay? So the pullback wasn't even really an issue, maybe just a slight pullback. I'm thinking that as we see a market go from an upward direction to a sideways direction, and now to a downwards direction, we're gonna fall off rather sharply, and it probably will retest this level down here. Okay, this support, this bounce, this region down in here. Okay, if not, we're gonna at least see this level as being tested before a move back to the upside. So just take note that we went from an upward direction to a sideways direction, and now we're breaking to the downward direction. And that's not what we're trading. We are trading this bounce, establishing support, and this break, okay? And then, of course, the sideways movement until the check signal right here, the break and check pattern forms. And I'm in on a retrace. My 2 times profit is really nicely tucked above any logical level that it's going to make it to next, which is really ideally what you want to do. All right, our 2 times profit target has been reached here as the market has pressed right down through this level right here, okay? And that's why when we don't see the market pull off of this level, we consider this a break check, okay? It just kind of meanders right here at the breakout level. It breaks through, kind of meanders around, and then we get the signal after the test. That's why we're not targeting this level, okay? Because when this happens, we still are going to see that move come away from this break line. All right, we're going to see that move before the market pulls back to it. Okay, so that's why it's a perfect example of why we're using a further out level. In this case, this form of resistance, this bounce point forming a resistance, and then as you get, let me point this out also. When there's a large-bodied candle that breaks back through a level of former bounce point, former resistance, or support, when you have a large candle that breaks through there, that's telling you, that's further reiterating the fact that this is a very significant level and something's happening right here. In this case, a lot of traders are deciding that we're going through this level this time. And so off it goes and it continues on, okay? So from that, one can deduce that when the market returns to this level, something significant is going to happen again. All right, so all I know is that when it returns to this level, I want to be out of my position, because what significant juncture is going to happen here, we don't know. Is it going to be a bullish spike? Is it going to break right down through and continue on? Either way, I've taken my little bit of the pie right here. I've taken my 2 times profit, and I'm out, and I'm on to the next trade. Okay, so learn to watch for these break check patterns. They're very powerful. They, once again, the bounce, the break, we're retesting this level, and the market, by forming this signal, is telling me that we're not going back into this zone again. Not anytime soon. We're going to take this down to the next level before returning here, okay?